The IPO market is firing, so let's get straight to one that's right down your alley.
Right down our alley, and we talk about our double engine. We have another double engine with us as well. The MD, CEO of Gadgil Jewelers joins us now. Jewelry retailer Gadgil is coming out with an 1100 crore rupee IPO. Opens for subscription today, closes on 12th of September. MD Saurabh Gadgil and Executive Director and CFO Kiran Prakash Firodiya join us in our studios to discuss the company's prospects going ahead. Thanks a lot, gentlemen, for joining in, and congratulations for entering the stock market in a sector which has created a fair amount of wealth for investors. Over the long term, one company for sure that's tightened, but over the very recent term, all the others as well have been big movers, the kinds of Kalyan, Senco and Thangamayil. You know, now that you're in the markets or coming in the markets, there is lack of scarcity premium here, because one would say, okay, this is a new offering. There are already other players. What is it that we look for in Gadgil? One could be valuation discount, second could be growth prospects, and the third could be improvement in margins going forward. So, you know, if you could give us a sense of what growth can you sustain going forward. Let's start with that.
Thank you to you both, and it's a pleasure to be here today and on the first day of the issue open. So a great moment for all of us. I think it's a testimonial to the entire team's hard work. And I just want to just thank my grandfather Rajika, who came from Sangli to Pune. Tomorrow is the birth anniversary, September 11th, and it's falling on days of the IPO, so it's a great feeling for all of us. To answer your question, I'd first like to say that we have a very unique positioning in the market, which we call as scarcity. By that I mean that we are the only organized family jeweler in the country. I'll explain more to you on this. When you talk on a family jeweler, you talk on a jeweler with a relations for 3 decades, 4 decades with a customer. There are family generations who will be buying from that particular jeweler, your dadi, your mother, yourself. And that's how the family jeweler is known to be a part of extended family, reliable, doing services like valuation, repairing, polishing, and other kind of things, which is like a one-stop shop for you for anything you need in jewelry. Yeah. Now, we have been that for the last 20 decades in Maharashtra. We have families which are with us for 4 generations, karigars who are with us for 3-4 generations. So on that side, we are a family jeweler to maybe 25-30 lakh people in Maharashtra or from elsewhere. At the same time, we are also organized. So we'll be doing almost all the things that a family jeweler will do, but in a very controlled environment, in a very SOP-driven, process-driven environment, and that makes us different. That makes us unique. When you look at my business, 30% of my sales come from made-to-order. Which is also a case with a family jeweler. You'll walk into a jeweler, you'll say, I want to make this ring for me, I want to do this chain, some changes here and there, I want to make a bangle. And a family jeweler will not try to sell you off the shelf, he'll make it for you. That is what even is special at our end. So that is what makes us really different from the market. And we feel that this is going to be one of the growth drivers as we go ahead. We'll be selling the same customized made-to-order jewelry at the same price what will be off the shelf. And in a very short span. So we'll take 2 days to make a bangle, going up to 10 days to make a piece of jewelry. So it's a very sweet spot for a customer. And that, I think, is going to be one of our unique points, along with the legacy, along with the brand, and our understanding of the market.
All right. Saurabh as well as Kiran, welcome to the studio and congratulations on opening of your IPO. One word, I personally been to one of your stores around 5 years ago, and it was a pleasant experience. So as a customer, I was satisfied. So good on you all. But stock market's all about satisfying the shareholder, and they would like to know a few numbers. Sure. Now, getting into this IPO, your growth is looking very good. Sometimes Mangalam, me, all of us here at CNBC-TV18, we interview a lot of managements ahead of the IPO. Suddenly, the numbers start looking very good ahead of the IPO. Some of times, it's mostly, business as usual. So, do you think this sort of a growth momentum that you've delivered is sustainable?
You want to answer that? Or?
Yeah, definitely. So typically the growth which we are observed from post-COVID, because these are the year which are abnormal for all the industries. So considering that as a benchmark for setting up the next 2 to 3 year execution plan, and that the same thing we are utilizing to actually materialize whatever we have decided. We have done all the renovation, expansion through the entire holding, which is in the form of borrowing, and we haven't increased our borrowing levels also. So keeping the same momentum with the help of internal accruals, we are doing all this renovation, expansion. Last year we have added 4 new stores. This year we have already added 3 new stores in Q1. So we are hope that we will keep the same momentum again going forward. As far as RHP is concerned, we are posing that we are going to open 12 new stores. So 9 in this year and 3 in next financial year. So we are very much hopeful that we will keep the momentum with the same pace going forward also. As number of stores also increase, we are also going to increase the studded portion, which is currently in the range of 10 to 11%. So going forward, that portion is also one of the thing which we are aggressively looking to expand. So having said that, in totality, we will keep the same margin level going forward also, and as well as the revenue, that momentum also we are going to keep the same.
So, of the two things that you spoke to us about, one is the store addition and the second one was the studded portion itself. Let's take both those points forward. Store addition, in the RHP, you said about 12 stores. I'm sure with your internal accruals, you would add a lot more as well. Say 20 stores are added over the next two. Yeah, go ahead.
No, I just want just to add to Kiran's point, the revenue growth which we're talking about and the margins. So our margins, when you look at the retail part of our sales, is almost on par with the industry. Gross is at 13%, EBIT is at 7%, PAT at 4%. So margin-wise, we are already there.
So what explains the discrepancy between what you've reported versus what?
No, there's no discrepancy. The out of my total sale of 6,000 crores last year, 1,500 crores was old gold sold to refinery to purchase back new gold. This business had no margins. So it's a sale and purchase transaction, GST paid transaction, and that is why we have seen that the margins on that on a 6,500 level have been at 8-9%.
So this trading business will be out of.
So we are looking at an option to move this to a
net basis.
A net basis. While we can look at an exchange model for this, and it's not a sale purchase. By this, we'll be able to maintain the same margins, but we'll be at the same levels of PAT, EBITDA, but with higher margins. So the margins would come to gross at 13%, and like Kiran added another addition from the studded bigs, because we started studded very late. It's just been a 5-year journey for us, and from a zero sale to a 450 crore sale is what we have done in the last 5-6 years. So it's growing at a very fast rate. That should add more margins, and expansion definitely is going to be something which will further add to it.
So Kiran, two things you spoke about. One is the studded business, which is 10-11%. You're looking at taking that up. So as an aspiration, since we want to keep your banker as well happy, where does that number head from 10 to 11% of the mix? And the total number of stores you gave us, 9 stores is what you're looking at. 3 stores you have already opened. From around 36, I think so is the last number that we have. Where is that number headed in the next 2 years?
Okay, so today, as far as current financial is concerned, that total count tally reached to 39 because we have added 3 stores already.
Yes.
And whatever we have mentioned in RHP, they are excluding these 3 stores. So along with the 3 stores, we are planning to add 9 stores fresh during this financial year.
48.
So now the count will reach to 48 this financial year, and next financial year again 9 store we are planning to
57.
So it will reach to 57. So
out
that
of the way.
So roughly 60 stores if you add per store. Currently you're doing about 150-160 crores of revenue. Will that revenue momentum continue per store? Because if you are adding 25 new stores, that adds another 25 into 150 sort of.
That's why the whole strategy we've done was that we wanted to be the largest player in Maharashtra. Today we are at 39 stores. I believe the leader is at I think 59.
The leader being Tanish.
Tanish at the 59-60 stores. So the plan, the agenda on the list is to be a 60-store company in the next 2 years. By this, we want to go on a focused growth. So Maharashtra is places where our stores do 4.5 stock turns every store. So our investment in a store is around 35 crores of inventory, and we turn it around 4 times. So that comes to 170 crores. We'd be able to continue that in Maharashtra even as we move ahead, because these stores are going to be in Tier 1, Mumbai.
So 60 into 170 gives you 10,000 crore roughly revenue. Is that the target?
That's right.
By when? FY27?
FY27.
All right. And
that
studded, Nigel asked about that.
Yeah.
How much would that be?
Studded, the company wants to be, at least targeting 15% in the next 2 years. So by that, means 15% on the entire grown revenue. That is where company plans to go. And eventually, we would like to be focusing towards 18 to 20%. That is where we think that we'll be able to have a good mix of studded versus gold. And that's the company aspiration. We're working towards that. There's a lot of work.
So what happens to the margins then? Do we see double digits at 10,000 crore base?
Margin should increase. That's what we are really aiming for. So that's something which is possible. And because I mentioned we're in Maharashtra here, my cost, the overhead cost will not go up drastically, because I'm going to be limiting myself to a state for the first 2 years. So in the first year, definitely we'll see improvements in margins, improvements in top line, and we'll see a lot of robust growth from these particular areas which we're targeting.
Okay, all right. And these are aspirations. So your banker and all the regulators as well as
3 aspirational numbers that we have so far: 10,000 crore revenue by FY27, 60 stores, and roughly 10% margins with 15% sales coming in from studded.
So we've got those numbers. Just a final question. maybe people outside Maharashtra as well want to have a feel of your brand. At some point of time, do you think that's going to be the target, say 2030 or something, where some part of your business comes from outside Maharashtra? Do you think Maharashtra is good enough for you?
We love Maharashtra. We are born here. So
We all love Maharashtra. We're all here.
Jai Maharashtra. So Maharashtra is something which is going to be on our radar for the next 2 years.
Yeah.
But to reach the potential of the state, we still believe the state has potential, has areas where we are not present. Post that, we want to follow the route of the Peshwas, how they went from Maharashtra to Madhya Pradesh, Chhattisgarh, Jharkhand, UP, Bihar and Delhi. That is the plan which the company has earmarked for the next 5-7 years. So if you ask for the next 7 years, again, aspiration is to be a 100-120 store company. But again, focused on one state at one time, be a leader there, make a mark there, and then move ahead. So we do not intend to go randomly into different cities of India. We go in a very focused way. Right. But yes, post Maharashtra, we would follow the Peshwas and try to...
We follow the Peshwas, you invoke them, great Peshwas. But, just one follow-up on that. You said there's a lot of headroom to grow in Maharashtra itself. What's your market share here?
So based on the numbers approximately which are given by the bankers, the share would be around 10% of Maharashtra today. These are numbers which are really on the estimate of the industry and then the share of Maharashtra from that.
Got it.
So it's around 10%.
All right, gentlemen, we appreciate you coming down to the studio and speaking to us here at CNBC-TV18. You'll have given us the aspiration. Well, the share market has various expectations from you all as well. On listing, we request you all to come back on the show and then we'll push you all a little bit more for some numbers. All the best, gentlemen, and thanks a lot for joining in.
Just Nigel, he said that he wants the share of studded to increase from 10% to 15%. I'm just looking at every piece of jewelry that he's wearing. On him, the share of studded is nearly 95-96%. I presume all that you're wearing on your body right now comes from PN Gadgil.
Aspirational.
Thanks a lot.
Aspiration.
Thanks a lot, gentlemen.
Thank you.
Well,